SEI is starting to look like a coiled spring, ready to release serious energy. Two respected market analysts have spotted the exact same bullish setup forming on completely different timeframes, and both are calling for a potential breakout toward the 0.22 zone in the days ahead. But before traders start piling in, there's one critical detail on the daily chart that could change the entire outlook. And surprisingly, most people aren't paying attention to it. Let's break it down and see what's really going on. After several weeks of slow, grinding movement to the downside, SEI's chart is beginning to show signs of compression. The token has been printing lower highs while holding a consistent base of support, and that combination often points to a potential shift in direction. Right now, the structure looks like a falling wedge, one of the most reliable bullish reversal patterns in technical analysis. It forms when selling pressure gradually loses momentum and the trading range begins to tighten. As volume contracts, buyers start absorbing sell orders, waiting for that decisive breakout moment. SEI's hourly chart is displaying a textbook version of this wedge pattern. He believes that if the token breaks above resistance with conviction, we could see an explosive move towards 0.22 or even higher. Right now, SEI is bouncing between 0.185 and 0.192s, creating a tight consolidation zone that's acting like a spring under tension. Each dip toward 0.185 is getting bought up quickly, showing strong buyer interest. The 9-day exponential moving average, EMA, is flattening, suggesting that momentum on the downside is weakening. At the same time, momentum indicators like the RSI and MACD are showing early signs of bullish divergence, a classic hint that sellers are starting to lose control. Volume is also beginning to pick up slightly, which is what you want to see before a breakout. When price compresses into a wedge while volume increases, it usually signals that a decisive move is coming soon. The key question now is simple. Will SEI break out above resistance with strong volume, or will it roll over and continue downward? Because if that breakout fails, the bullish setup can collapse fast, and traders who enter too early often get caught in the wrong direction. Let's look at the optimistic scenario first. According confirmed breakout above the wedge could quickly send SEI up to 0.22, possibly higher if momentum traders jump in. Highlights a breakout zone between 0.205 and 0.215, which aligns perfectly with the 0.5 Fibonacci retracement from the previous downtrend. Fibonacci levels often act like magnets for price action, especially when multiple indicators converge in the same region. This is where smart money starts paying attention, not when the crowd is chasing the move, but when different technical signals start to align quietly under the surface. Adding to the bullish narrative, analyst Schul from Alt Crypto Gems recently mentioned SEI's growing traction, noting 3 important factors. An RSI divergence typically signals that bearish momentum is fading, while bullish strength is building underneath. Combined with strong volume and a tightening wedge, it paints a picture of potential early accumulation. If SEI manages to clear 0.19s to 0.20 with conviction, momentum could easily carry it past resistance and set the stage for a breakout run toward 0.22 or more. But there's a big catch, and it's visible on the higher timeframes. While the lower timeframes look promising, the daily chart tells a more complex story. Since April, SEI has been respecting an ascending support line, bouncing off it multiple times as it maintained its overall uptrend. That trend line acted as the backbone for bullish structure, a foundation for steady growth. But in mid-October, that support finally gave way. SEI broke below the trend line in a decisive move, signaling what technical traders call a structural break. After the breakdown, the token attempted to recover, but when it retested that same line, it failed to reclaim it. The support had flipped into resistance. That rejection is important. It tells us that while the short-term wedge pattern might trigger a bounce, the larger trend is still technically bearish. Until SEI reclaims that broken support on the daily chart and turns it back into a floor, the broader market structure favors sellers. This is where many traders get trapped. They see a bullish setup on the short-term chart and forget that it's forming inside a bigger downtrend. Without context, short-term signals can be misleading. On the short-term charts, hourly and 4-hour, SEI is showing strength through a tightening wedge, strong support around 0.185, and increasing momentum. On the higher timeframes, daily, SEI is still in a bearish structure below its previous trend line and fighting to reclaim key resistance zones. This means the coming move could go either way. It's a tug of war between early bullish sentiment and lingering bearish pressure. In setups like this, patience is everything. Many traders make the mistake of chasing breakouts before they're confirmed, only to get caught in false moves. The smarter approach is to wait for confirmation, a clear close above resistance, supported by strong trading volume. If SEI breaks out cleanly and then retests the level successfully, that's a genuine sign of strength. If it fails and drops back inside the wedge, it's likely just noise. Remember, this is not financial advice. Everything here is for educational and informational purposes only. Always do your own research before making any investment decisions. Even though analysts are seeing similar bullish signals, volume and confirmation are what separate speculation from opportunity. Wedge patterns fail frequently when buyers don't show conviction. Institutions and professional traders follow momentum, not hope. They don't save charts that are breaking down. They ride the trend once confirmation arrives. Right now, SEI is sitting in an important zone where short-term optimism clashes with long-term caution. The wedge formation, the bullish divergence, and the growing volume all point toward potential upside. But the overarching trend on the daily chart reminds us that the market hasn't fully flipped bullish yet. If SEI can break above wedge resistance with strong volume and reclaim the old trend line, that would mark a legitimate trend reversal. In that case, 0.22 becomes not just a target, but a stepping stone to a stronger rally. Until then, traders should treat every bounce with caution. The short-term setup looks promising, but the bigger trend still carries risk. Keep an eye on 0.185 support, 0.215 resistance, and watch how the market reacts around those zones. If you found this breakdown helpful, consider subscribing and hitting the bell icon for more updates. Like and subscribe this. SEI is building up energy, and when that energy releases, it could be one of the most interesting short-term moves in the market.